Welcome back. Residents in India are cooling off from a heat wave that swept through parts of the country. Temperatures in some areas in the north crossing 40 degrees Celsius on Monday and taking its toll on some. This year's summer is expected to be hotter and less rainy than previous years. It's also been sizzling hot for the Indian markets, which have been going from strength to strength this year. The Nifty hitting a record high on the Monday session and attacking onto its gains for the first quarter. We should note that the markets are shut today for a public holiday, but there has been concern that India's demonetization drive late last year would stall growth. But our next guest believes, despite the short-term impact, the government's move will drive growth in the long run. Michael Fernandes is with us now, partner at LeapFrog Investments. Mike, very good to see you. From a consumer's perspective, we all know the megatrend and the theme that India is underbanked in the conventional definition, but also through the digital platforms. Demonetization has really given that transition a much-needed kick in the pants. Where are we in the process?
So I think the initial shockwave of demonetization has mostly played out. There's still a couple of areas, there's some amount of loan recovery which is happening in the market, but most of the industries, as we've seen, the GDP growth has been strong, the industry growth has been strong. There's a lot of liquidity in bank accounts. And, the governments for the last 5 years have been trying to get India banked. And what demonetization did was get everyone to actually use that bank account, go to the bank account, put their cash in there. And a lot of them have left the cash in there. It all hasn't come out. But that's the first step of the game. It's got people used to the fact that money can be left in a bank. It need not be kept at home or under the pillow. The next phase of the game, which is where the action's currently happening, is how do you get people to leave their money in the bank account and to use digital ways of paying people, right? So instead of going to the ATM, withdrawing the cash and giving people cash, transferring money electronically. That game is young, I'll be honest. It's very, very young. And we're seeing three types of players. And India is one of the few markets where all three types of players are going to be active in this space. The telcos are very active. So they have payment bank licenses, a number of them are payment bank licenses, and they're launching their own initiatives. The banks are trying their best to catch up. They're not set up for it, but they're trying their best to catch up. And there's a whole number of third-party payment providers, the PayTMs and MobiQuicks of the world, which have been playing in this marketplace for some time on their own, even before all this happened, and are really taking advantage now of this move to digital.
Let's zero in on that ecosystem and give us a sense, Mike, who you are backing. You guys are private equity. You're looking for the most promising, disruptive upstarts. Who's best of breed?
The call we've taken on this one is that between these three, our sense is there would be 2 or 3 who would actually get to scale. What combination is to be seen, I'll be honest. I don't think it's easy today to predict that. What we are backing is that with that digitalization on payments, the next industry which will pick up is lending. So today a lot of SMEs can't get access to money because no one knows what transactions are actually happening. They don't have banking history. Once they become part of the banking system and they're actually earning and paying digitally, they've got the entire transaction history on file, they suddenly get access to formal credit. So formal credit today, which does not really touch the SME sector because it's very difficult to underwrite them, will change drastically. Banks will therefore have to find partners. They'll either partner with the telcos, and the telcos have a natural advantage. They already have the infrastructure in place. They don't necessarily have the mindset. This is not a big part of the business, but they have the infrastructure in place. Or with the third-party payment providers, the MobiQuicks and PayTMs of the world, who are partnering with a number of the banks to offer services for them.
Let me just explore this from the perspective of the legacy banking industry, because fintech is just completely shaking up the landscape globally. From the Indian perspective, what's the approach? Can we expect a wave of M&A? And are the banks more inclined to adopt a strategy of not necessarily building it internally, but just buying it? And does that usher in a wave of consolidation?
They'll either buy or they will partner. We've already seen a number of partnerships kick off across the industry. banks with the telcos. So nearly all the big payment banks, which are primarily owned by the telcos, have a banking partner as a minority shareholder to get access to that payment network. The Paytms and the MobiQuicks of the world are doing their own tie-ups with banks to actually act as their white label wallet for mobile transactions and to run the agency networks for them. Will any of the big banks be able to actually buy out a payments provider? Possible, but I think for them, they would need to believe that they can add value to that business through the lending, through the balance sheet support now to that consumer set, and they can leverage the data. The public sector banks, unlikely to do that, but I wouldn't be surprised if a couple of the private sector banks over the course of the next few years actually own one of these agency networks and take control of it.
The problem with fintech, as is the problem with all new startups and dot-coms, is that you have crazy valuations, it attracts a lot of dross. So as an investor, you've got to really be doing a pretty good job of separating the wheat from the chaff. What metrics do you use to really inform that process?
So there's a couple of key things we look at. The first is, does this product actually add value to the consumer? And as we've seen, and we've gone through some of these businesses, and we've been looking at this space for some time, very often it's technically very sound, but the use case is not that established. There are a few use cases which are working. There's a whole number of use cases which don't work. So for example, on mobile wallets and digital money today, buying airtime digitally works very well. Paying some bills works very well. It's still not integrated into supply chains, which is where most of the cash flows around. So the dairy farmer today, in very few cases, can get his money digitally, and he can't use his money digitally. So even if he gets it digitally, he still has to go to the bank account, withdraw it, so that he can buy provisions for his family. Integrating the supply chains and figuring out how you get that to work, when we find players who do that, that's what we get excited about, right? So we have one of our investments, IFMR Holdings, which actually does work in rural areas and is working within those communities to get people onto the supply chain. That's an exciting proposition for us. That makes a lot of sense. Those we see as long-term sustainable businesses. Another player we have which distributes insurance over mobile phones, right? So as all these payment players digitize, insurance now becomes a very value-added on product, which provides enormous benefit to emerging consumers and very difficult for them to access such insurance otherwise. So that's another player we are backing, who actually is riding on those rails and then adding value-added services.
It's a fascinating sunrise industry, isn't it? And it's all about integrating the supply chains in the online ecosystem. And what you said about the vast untapped demand in the rural economy, I think that's a huge story. And I see that playing out in Sri Lanka, where my origins go to, so, but that's another story. It's a fascinating story, Michael. Thank you very much indeed for your time today. I appreciate it. I've been speaking to Michael Fernandes, who is partner at LeapFrog Investments.